there, Lucas Bolahood with you of the Bolahood Group at Coldwell Banker RMR Real Estate. Welcome back to this week's episode of Finance Fridays. We are recording here the last week of September, and it's been a pretty active month in the real estate world here in Durham. But home affordability has been a big topic of conversation. On September 6th, the Bank of Canada decided to hold their policy rates at 5%, but inflation in August eclipsed 4.4%, and that's of a concern for all of us here in the industry. We're looking forward to that September inflation report as well from the federal government here to see how things are performing. But we could be trending towards a 25 basis point increase to those policy rates from the Bank of Canada on October 25th. So that's an important date for everyone to keep an eye on. Now, a good sign, I don't know if you've noticed this, but I certainly have, as I stopped to gas up my car on Monday here and noticed that gas seemed to have dropped about 12 cents, within a week or so. So, I mean, we were in that $1.70 range for a good chunk of the summer here, and now we're at just something under in the high 150s. So it's a nice sign to see at the pump anyway. But Alex is not with us recording live today, but she has provided us some insight into what she is experiencing in the financial world these days. So let's take a quick cut and see what Alex has to share with us this week.
Hey there, it's Alex here to update you in regards to interest rates and what's happening on the mortgage front. So wanted to remind you that Bank of Canada held its policy rate, or prime rate stayed the same at the start of September. However, we did see an increase in the cost of funds this past week correlated to the bond market, and that equated to RBC making a small increase to fixed pricing. So you can expect, if you're coming in for renewal, you're applying for a new mortgage, you're adding on, interest rates are in that 6% range, even getting into that 7%, unfortunately, on the shorter terms, those 1 and 2 year terms. So don't be shocked if you hear that 6 to 7% range. I think it is still hard to hear and hard for all of us to adjust. And it's been quite the year. So I have to say, I don't think that interest rate increases are completely off the table here for the fall. As Luke mentioned, we're going to be seeing the Bank of Canada make an announcement end of October. So we will be keeping you in the loop on that. And we've got to get control of inflation here. So monetary policy takes time, and it's certainly hitting households month after month after month. So a reminder to check your mortgage statements, pull those out of that filing cabinet, or get onto your online banking and take a look. When is your mortgage coming up for renewal? Are you prepared for the increase? Do we have to do some consolidation in regards to other debts that have higher payments and higher interest rates? Or are you going to be doing a straight renewal? Are you going to be looking to lengthen your amortization to help you reduce your payment? All of those options we can explore for you. Please give me a call. We can connect and find a way to improve your financial situation. Thanks so much, Luke. Till next time.
Now, thanks, Alex. I really appreciate you putting that aside for us here. Really important that we recognize the fact that the cost of living have increased, and there is potential for another rate hike in October. So something for us to keep an eye on because of inflation doing what it has been doing over the last couple of months, and the Bank of Canada obviously is monitoring that situation. Now, interest rates really have impacted homeowners' cash flows considerably. I think when you look at home values in August of last year, the average sale price in Durham was $920,000, give or take, and the interest rate, the fixed rates at that point for, let's say, a 5-year fix was around 4.5%, and your payment on that home, based on the average price, was about $3,700 a month. Now, if you look forward to today, the average sale price is $930,000 and change, and the fixed interest rate at a 5-year is at 6.3% for a lot of places. So that same payment, excuse me, is about $4,500 now, or an $800 increase year over year. So that's a big hit to our pocketbooks, no doubt. But when you speak to different things about how, like recently we've spoken a lot about how to lower your interest rate, that being if you're going to port your existing mortgage to the home you're purchasing and try and maintain that rate, might involve rate splitting, where your different components or sectors of your mortgage are assigned different interest rates and different terms along with that, and you can try and lower your overall payment that way. Talk about new builds and buying down interest rates in the pre-construction world, or situations where there is a vendor take back mortgage and the seller is the one actually providing the buyer with the mortgage. Those are different ways to help lower that interest rate and payment overall to make the numbers work on a cash flow basis for you. But here's the great thing for someone who's owned their home for an extended period of time, let's say 5 or more years. You've got one great thing in your corner right now. That's equity. So, if you look at the value of homes, even just in the last 3 years, they've increased by 1.5 times in the last 3 years. So people are sitting on hundreds of thousands of dollars in equity in their homes. Now, keep in mind, you can't actually realize this equity until you sell your home. So there's certainly homeowners that should not be overly concerned with their ability to afford a home based on today's prices. If you look at the baby boomer generation, for example, we've seen those individuals may have seen their kids move out and start their own lives, independently, and after being in their home for 25 plus years, let's say, and you're finally an empty nester. Now, a lot of situations, a lot of families will say, actually, I still have my adult kids living at home with me. So I'm really concerned that they're going to have trouble getting into the marketplace, which is a valid concern. Kids have gone through university and accumulated some educational loan debt, and they've got to spend time in their career paying that down before they can actually qualify for a mortgage, to purchase the home they want. Now that we'll call North American Canadian dream of buying a detached home as a first-time buyer isn't really there anymore. The entry-level point to the market in that $400,000 to $500,000 mark is more like a condo here in Durham region these days. So people do have to adjust their expectations on what they envision that first purchase being, and you have to climb the property ladder. But when we get back to that question of equity, back in 2021, there were a lot of situations where a parent would pull equity out of their home because they had so much equity in it and gifting that to their children for a down payment. Now, that strategy isn't as effective today, given the cost of borrowing and higher interest rates have really discouraged that financial gifting as you're trying to pull money out of the property to gift to a child to purchase a home. Those line of credits, the interest rates on that HELOC loan are much higher than they were in 2021. So maybe that's not the most effective strategy, but you can still accomplish your goals and dreams through real estate, no matter the market. If we look at Durham region right now, we're sitting at around 2.3 months of inventory based on about 1,800 active listings in the market as of today. And if we go based on last month's sales numbers at 776 sales, we are getting closer to that 3 months of inventory mark, which is going to put us into what they describe as a more balanced market. So, that does mean homes are going to sell a little bit slower, or they're going to take longer to sell, I should say. And as interest rates take a deeper hold on the ability of the purchasing power of buyers, prices will shift down as time passes here. But homeowners do need to understand what their current market value is, because what a home sold for down the street 2 months ago is going to be vastly different value today, given the borrowing power of home buyers here in not just Durham but across Canada. So that's where I think you need to be very mindful of when you're trying to compare what your home's value is today with maybe what someone else's did a little while ago. We have to be very current, really on a day-to-day or weekly basis when we're trying to assess value of your property. Nonetheless, I appreciate your taking some time to view this video with us today. We'll have Alexandra back with us for our next recording, and we very much look forward to bringing that to you then. So with that, have a wonderful rest of your week. Get ready for Thanksgiving coming up here, and I hope all the kids and parents adjusting back to the new school year are doing so successfully as well, and everyone's staying healthy out there in the meantime too. So have yourselves a wonderful day, and bye for now.